What's going on, everybody? Episode 116 of the Automation Station here with the PeakBot team. Good to be here. Not crazy day. Crazy few days. Let's get right to it. I mean,
I feel like we should pull up a chart and maybe address the elephant in the room.
Watch it live in terror or excitement, depending on what your trades are. Yeah.
Thomas, do you think people are losing their houses in this market?
Close to it. I'm sure.
I think people lose their house in all markets. This doesn't help.
Yeah. I feel bad for the people who were getting ready to retire. And this happened.
All of our parents. Yeah.
Mm-hmm.
That's our parents right now.
Yeah.
Well, we still have a very interesting show for you today. We might be tuning in a little bit more to the market or talking about different things impacting the market these last few weeks a bit more than we would usually. It just feels appropriate. But we will go through last week's results. I'll tell you guys this. Ben and Thomas, and pardon me looking down, Ben and Thomas feel they have a great plan for PeakBot picks this week. Both of them backstage were very excited about how they're approaching their picks.
I feel pretty good.
On the other hand, reigning champ last week, 3 for 3, feel helpless, truthfully, over here. So
I'm actually going completely against you this week, Dylan. You'll see.
What'd you say?
I'm going completely against you this week.
You don't even know what I'm picking.
No, but it has nothing to do with that. I'm just like, you'll see.
Okay. You're bearish Walmart. I get it.
Yeah.
I had Walmart on my list, Thomas, and then I took it off for a different pick.
Why?
I'll explain why.
All right. Well, I'll explain why I went for Walmart. I mean, there's great. We'll go over it.
We'll get into it.
We'll get over it. I feel like we should pull up a quick mark SPX
pull
chart.
Up the chart, or if anybody's got some hands-free trades, I don't think any of us are trading
condors
right now.
I was about to say condors are going to be off today. The Iron Condor bot has been turned off due to extreme market volatility. As we know, condors don't do great in volatile markets. Therefore, the bot will be off today. We'll see how things look Monday. See if that bot will be back on. But that goes for other bots too. King Condor off. Not because of any sort of calendar event or extreme volatility, although it is because of volatility, right? That bot does have volatility metrics built into it to be off on days like today. So there will be no new entries for the Iron Condor or the King Condor today. I think that's basically it in terms of inactivity today. So we won't see any trades in 2 minutes. Normally at 12 p.m. Eastern, we'll see our Iron Condor trades go through. We will not see that today. And then at some point, I would assume around like 12:15-ish, we'll start to see our trend spread trades rolling in, and then we can analyze those. So what do you guys say? We want to look at SPX first before we hop into trader trivia?
Yeah, let's talk. Maybe let's give some opinions. What do you think's happening? Not financial advice, but why this is happening in the market. There's a lot of people listening, trying to figure out why. I believe both of you guys have some good insights. Hard to explain that.
Yeah, but I mean, these gap downs are just crazy.
Nuts.
I mean, I think yesterday, at one point the stock market was close to being halted completely, because there was such a big drop. What?
Like a circuit breaker halt? When the market
no, it was just so much volatility they were going to halt trading.
Yeah. I think they call that a circuit breaker.
Oh, that's what they call it? I never heard of that. That should have been a did you know?
It should have been. Maybe it is today. Who knows?
Yeah, maybe it is. Maybe Ben's making a change right now.
So I was convinced yesterday, because I was looking at these previous bounces off of the $5,400 level from about 6 months ago or so. I was convinced that we were going to have at least a little bit of a dead cat bounce today. No, did not happen. And we didn't say yet. This is a result of tariff announcements, right? So,
and we also have to mention.
Let's get the opinions
it's also
down.
the reciprocal tariffs.
Right. I was going to say after these tariffs,
reciprocal tariffs
President Trump announced our tariffs and other countries started tariffs. My theory is, and I'm saying this, my theory is.
Can't hear Ben well. Can you, Thomas?
No.
Can't hear you well.
Maybe it's better that way.
Yeah.
There we go. Perfect.
Better? Much better?
Sorry.
Perfect.
Continue.
Okay, no problem. I'm gonna uncheck automatically adjust mic volume, and maybe that'll help. So my theory is that, and I mean President Trump has talked about it, he wants to bring more commerce to the United States. He wants to bring more jobs, more economy to the United States, rather than getting it from elsewhere. So this is part one. I have a theory though that because there is major concern about this driving up costs of everyday items that everybody uses, and therefore living expenses go up, which by the way they have been going up anyways. So we really need to start to see some relief. I have a theory that we're going to start tapping into all of our oil reserves as a country and start to get deeper into that industry like we kind of saw in his previous term. And therefore, I'm probably going to be investing in some American oil companies for a longer term play. If I come up with anything notable with some like good research, I'll definitely bring it up. But as of right now, it's just a theory. I'm not making any moves. That's just what I'm thinking.
It's a good thought, Thomas. What are your thoughts on everything going on here?
I do agree with Ben after he mentioned it this morning. You know, this isn't financial advice, but there's one oil company that my family's had for quite some time. It's called Texas Pacific Land Corp. And essentially, they just do oil fracking in Texas. I think the ticker's TPL. I think it's TPL. That's a big one that my grandfather's had for a very, very, very long time. Essentially, they just drill oil in Texas. So it's a great theory. He's had it forever. He's never ever sold it. I think he's had it since like 1980, something crazy, ridiculous like that. So yeah.
1980, you guys are rich.
Grandpa's rich.
It was one. Yeah, it was one that he swore he would never sell. Yeah, it was actually like his like one stock. He put like everything into it, and unfortunately, he passed away right as it started booming. So he never actually got to see that stock succeed. I know. It was someone. My grandma actually, she mentioned it at the funeral that this stock. He spoke about it all. I swear, he spoke about it all the time.
Well, I think your grandpa would be very happy to see what you're doing today, Thomas.
Your grandpa.
I think
got
he
in
would
at
do,
probably
yeah.
what, $2?
Something like that. Yeah.
Wow. That's
So-
pretty nuts, considering it doesn't look like there were any splits during that time. It just looks like.
I think there was one split. Recent, actually.
Oh, sorry. This is split adjusted. So, so $2 to get in, and it's currently trading at $1,100.
Yeah.
That's a great return, and it pays dividends.
Is somebody in the family holding the shares?
Yes.
Okay.
Yes.
All right. You don't have
My
to
grandma won't sell it. She sold some of them, but she still.
All right.
Wow. Grandma Thomas is raking it in.
Yeah.
I wonder if that's on the watch list. I don't know. Does it have a lot of volume?
I don't know if they trade. I don't know if they have weekly expiring options on it. I would be surprised if they had it. So Ben, yeah, if you want to start doing some research on some American oil companies, there's one of them. And also, I think that if you're going to be trading PeakBot picks or just trading PeakBot in general, it's going to be. Well, I'll always say my approach to it. It's really going bearish on companies that are going to be affected the most by tariffs. So which companies are going to be directly affected the most in the short term by tariffs? So for the next week, they're probably going to have to be dropping, moving sideways, go bearish on them for maybe a couple weeks, see how the market reacts, and see what happens there. I think that's going to be I think people need to understand that it's also a long-term play, not, you're getting short-term pain for long-term gain.
Right.
And I think a lot of people aren't understanding that, and they're like, well, inflation, this is going to happen, that's going to happen. Well, the whole point is, like Ben said, to bring manufacturing back to the United States and not outsourcing it. And I mean, you can even look Obama, Nancy Pelosi, and another former president, even, and I think Biden might as well said it, that it's not fair what the other countries are putting tariffs on in the United States. Now, I'm not big into politics, but if other presidents are so understanding of it, why didn't any of them do it? I'm not political. Transparently didn't vote. That usually gets more hate than voting, but yeah. So that's just kind of what I've noticed, that a lot of other people know this had to be done. Nobody wanted to do it. They kind of put makeup on a pig. Somebody wiped that makeup off, and now we are where we are today.
Yeah.
Well, hey, based on this technical analysis, the next stop is 49.50, so we could crack under 5,000, which would be quite a sight to see after we were just in the 6,000s a month and a half ago, 6 weeks ago.
So it is interesting that there's, at least in the retail trading world, what you're consuming on social, etc., is a lot of this. Yes, what Thomas just said, yes, this hurts now, but it's for the bigger long-term play, to keep the U.S. economy strong, to keep things within, the United States. It's very interesting. Let me tell you, for short-term option sellers, this makes your job a bit harder. But, when you zoom out here a little bit, it is maybe a little bit easier to digest. So, yeah, interesting. We're going to have to see. I think this was yesterday the largest loss, at close since COVID, I think.
That sounds right.
And now double dipping again today. So I don't know. It's wild. I'm actually going to be checking. I did get into at least one of my credit spreads for this week. So far,
I am in on all three of mine. So why don't we do this? Why don't we go to Trader Trivia?
Let's do it.
And get that out of the way. Give people an opportunity to win 3 free months of PeakBot. However, we do have a new promotion. If you are not currently on Tradier and you're open to making a Tradier account, you can do so at peakbot.com/Tradier. Dylan's going to make a banner for it. If you signed up, deposit $5,000, you're going to get 6 months of PeakBot Pro for free and 6 months of Tradier Pro for free. So that's commissions-free option trading with bots, no strings attached for 6 months. Actually, the only string attached is you need $5,000 in your account. That's the only string attached.
I'm getting it going here. I'm putting all the details in it, and we'll have it running 6 months.
And then afterwards, you are going to get PeakBot Pro for the price of PeakBot Standard. So you will not be charged the $99 a month. You'll be charged $59 a month for the PeakBot Pro. And that includes access to our exclusive Pro bots, such as the King Condor and the Iron Fly bot coming out soon. We are going to have another long momentum strategy coming out in the next, I'll say the next 2 months. That'll be a Pro-only bot. So there's definitely a lot of great stuff in the Pro subscription that's not going to be available anywhere else, but you can get Pro for the price of Standard if you are on Tradier. And if you're already on Tradier and you still want that Pro upgrade, just shoot us a message. We're going to make a whole process, a form to fill out, which will be really easy for you to do, but that's not built yet. This is a fresh deal right off the press. So just shoot us an email. Let us know you want to upgrade to Pro. We will make it happen. All right, so the Trader Trivia question today, and you're going to text your answer into 973-888-1166, but the question is, which of the following is an option that gives the holder the right to sell a stock at a specific price before a certain date? Is it A, a put option, B, a call option, C, a stock option, or D, a futures contract? So think about it, text your answer in. We will text you back with a link to get started for free for 3 months. Or, of course, we got that banner scrolling at the bottom of the screen. 6 free months of PeakBot Pro plus 6 months of Tradier Pro for free if you sign up with our link, peakbot.com/Tradier. All the details are there. If you're an existing Tradier subscriber, trader, shoot us an email. We'll make sure that you get the Tradier Pro package or the PeakBot Pro package for the price of PeakBot Standard. All right. We ready for a little Did You Know today?
Sure am.
Did you know that in 1941, the U.S. government introduced Series E saving bonds that were also known as war bonds to help finance World War II? These bonds were sold directly to the public and were marketed as a patriotic way to help support the war efforts. So they weren't the first form of government debt, but they were certainly one of the first forms that were widely marketed as, hey, be an American patriot, help us with this war, support the war. And I'll tell you what, Series A, I was actually, they were already mature and they have been matured for a while, but a couple weeks ago, I was helping my grandma cash out on her Series A bond or Series E bonds. So those are some old looking bonds.
They sold the bond certificate. Do they have little tickets on them? Really?
Yeah, they got it was all the way back from 1941, I guess.
I feel like the certificate has to be worth something.
Besides
the value of the bond.
A collector's item.
Yeah, like a collector's item.
I feel like I need to call my grandma and tell her to step her shit up, is what I feel like after hearing about your grandma's. And maybe she's kidding. You know, I don't know about her finance. She does well. She's out in Arizona. She's got a nice place, but I don't know about all this. Anyway, very cool. Good. Did you know? Good trader trivia question. Again, text last chance right now. Let's get the music just bumping in here again. By the way, I am in on all three of my PeakBot picks as well now. A lot of premium, a lot more premium than I anticipated, which is good and bad. All right, let's give the people the answer here, huh?
All right, the answer is a put option. A put option will allow you to sell a stock at a specific price before a certain date. So that put option gives you the right, but not the obligation to sell your shares at a certain price by a certain date. Call app option gives you the right to buy shares, and then a futures contract requires buying or selling at a future date, unlike options, which are a right and not an obligation. And I guess if you answered C, you're not really wrong, but you're not right. You know, it's like one of those test questions. It's like, which one of these answers is more correct?
Yeah. Tough. But makes sense. Yeah. Put option, if you texted us A to 973-888-1166, 3 free months of PeakBot. That's right. Standard is what we're giving out. But again, let's get our Tradier Pro up on screen again, because it's going to be hard to beat that.
Very, very hard to beat that.
All right. Very cool. So I think we maybe we get into PeakBot picks, eh?
Let's get to it.
Hey,
all right.
Let's do it.
So I can do my my review from last week if we'd like, unless somebody else wants to go.
You can hit it.
Let's do it. All right. So I'm going to share my screen here. So 2 of my 3 positions from last week are actually still open. Both significantly out of the money and looking like winners. One of them just closed. So we're looking at week 7 here. These trades were opened on 3/28 last Friday, set to expire today. I had 2 put credit spreads and a call credit spread. All right. My Verizon one did not collect a lot of premium, didn't shell out a lot of cash or risk last week either, but made $8 in premium on a Verizon put. Just closed it for a $28 debit. I was trying to stay above 44. It was fluttering all day today. In fact, I wanted to, for a second, just turn trend spread bot off, just to kind of let it go a bit longer today. What's Verizon trading at right now? I want to see if I made a mistake and maybe could have monitored this. So my strike price was 44. Okay. It's 40 cents under, just looking here. Yeah, okay. So we were kind of fluttering right at the money here for a little bit today, but as we can see, trending a bit bearish there. So truthfully, I'm glad I got out when I did, at least for right now. So One loss there. Let's take a closer look at my put spread and my call spread on IEF and CMG. So these currently have, sorry, this is probably a little hard to look at. Look at these two blue open orders here. I have an open order from the trend spread bot on CMG for a $2 debit and a $1 debit here. So if those don't fill soon, I'll likely, I may just step in or whatever, but happy to just let these go. When we take a closer look at CMG down here, obviously well out of the money, trying to stay under 52. It's trading under 48, almost $4 off the strike. So I'm going to likely just let this thing go as well. I'll probably cancel this order. In fact, I'm going to do that right now. We'll just cancel that. I may do the same with IEF when we take a look at it in a second here. So yeah, this one's looking very good. Not in my PeakBot picks, but a fun one to look at was I took a call credit spread on Disney expiring today, trying to stay under 102, and it's at $84.82. So I'll make 20 bucks there. Not in PeakBot picks. Let's take a look at IEF. So this is the only other one. This is expiring today. It's a put credit spread trying to stay above 94. As we can see, well above over $3 in the clear right now, trading over 97. So I'm going to go ahead and I'll keep an eye on things, but I'm going to cancel this order as well, just to let these expire worthless, hopefully. So it's looking like 2 for 3 for me. With a total, let's see, if I'm making 26 bucks there, I'm losing 20 bucks on the other. I'm going to net green just a couple bucks on my PeakBot picks as it looks right now. But yeah, looking like 2 for 3.
Okay.
So that is my last week. Who's up?
Thomas, you want it? You want me to take it?
Ben, can you go?
Yeah, you got it. All right, let me get this on screen here. All right, so last week I was trading CCL, GOLD, and HPQ, Carnival Cruise, Gold, and HP. Small wins. I went with a small budget last week of just $300, and I made $19 on it, just doing some experimentation on some tighter spreads. It all seemed to work out. My CCL and HP position closed out on the 31st, which was Monday. So that was a nice weekend play. Got to take profit right after the weekend. I didn't have to hold my shares anymore. And then gold took profit for me yesterday. So I did go 3 for 3. If we want to look at where these wound up on the charts, I can pull up CCL. My sold strike was $21, and as we can see, start of this week, I said on CCL, I took profit on Monday, so I got in on Friday right around here, and then price dropped on Monday, going away from my strike, which is going to, of course, decrease the value of that spread, and that's what we want to see as option sellers. We want to see a decrease in value, so I was able to take my profit on Monday and then just remove all of that risk exposure I had for the rest of the week. Although, based on the way things went, I could have taken a full profit. All good, though. I'll take my money when I can. Now, we've got HPQ. Similar story. We've got my strike price at $29. And I got in on Friday. Here we were on Monday. So just a small drop. But that was enough for me to take profit at 60%. Removed my risk exposure, and of course, if we held, we would have been totally fine going into today and just letting that expire for the full amount of our premium. However, you just never know what's going to happen, right? As much as the market has fallen out this week, we could have rallied as much. That's my HP position. And then finally, we had gold, which closed out yesterday. Gold, I was bullish on. This is not the ETF. There it is. So gold, was that right? Was I bullish? Yeah, I was bullish on gold. I sold the $19 strike, got out yesterday, and actually it looks like today we have now fallen below $19. So it's a good thing that I took profit yesterday. Small profit at that, but took profit nonetheless. And I'd be paying for it today if I didn't take profit. In fact, I probably would have hit a max loss because I'm below my bot strike at $18. So I would have taken a max loss of $100 versus my win.
So think about that. Like, that's the importance of A, diversifying, B, the built-in take profits. You're sitting here saying small wins because it is, but let's think about it from a percentage standpoint. $19 on 300, you're talking what, 6.3% ROI on trades that were handled fully automatically. By the way, one of them, maybe a second, who knows with this volatility, could have all been blown if you were in your position. Like, exposure is not fun right now. So,
yeah, totally. No, I mean, I will gladly take, what was it, 6.3% you said?
Yeah.
I'll gladly take a 6.3% win on a week where the market is doing what it's doing now.
Yeah, absolutely. Well done. YT.
Right. Let me get my screen share. Tossing the hat down.
Losing the hat. My hair looks
There
too
we
good.
go.
And I don't have the I had a suction cup, like my baby suction cup toy, a hickey on my forehead for 4 days. It's gone, so I'm showing off the forehead today. All right, Thomas.
All right, put the screen up there. So, gonna start off. Oh, hold on. I'll wait. Sorry. All right, gonna start off because I'm in a similar position as Ben with his gold trade. I won it as well. I got in on gold on either Wednesday or Thursday. I know it took profit, closed out for me, so I was able to get out of that trade, which is great. But again, today, had I not taken profit for me, I'd be in the money about $1.30 right now. So that nice win there, rather than turning it into a $130 loss today, that's really, really nice. So I am able to. Did you really go and leave a comment? Is that how you did that?
I don't know.
Oh,
Zoom in. They couldn't see it.
Yeah. What do you call it?
Keep moving.
All right. Yeah. So, no, again, this would have been a loss. Last week, I was looking at it right here at the 280 level. It looked like a great form of support. And it probably still is pretty close. I mean, 280 to 278, $1.50 off from that level of support. So I was close, but unfortunately, no cigar. But I got out with that take profit, so that was a nice win on the week for me. Next, we're going to have PG bearish, so Procter & Gamble bearish. This one, big winner, I believe, close to it, but sold 172.5. So right up here, I saw some support, some resistance at the 172.5 level, so that was really nice. Unfortunately, I didn't get take profit, but I'm out of the money just because it had some dash to it this week. So a little dash, not enough to take some profit. It was a little too close to the money all week. Couldn't hit that 60, 70, 80% level on the days that take profit. So stayed there, set to expire worthless. Really solid trade there. Next up, we have another trade that unfortunately just went in the money. So this is my one loser this week. Couldn't get out of it. BMY went bullish on it to sell 57. Not a good trade. Unfortunately, where I thought there was some support, wasn't. Blew right below it, down to 55. So that was really nice. Not really nice. Really unfortunate for me. But yeah, so that's my one loser this week. Set to take about $120 loss on that one.
Okay.
Looks like I'm going to walk away with the win.
Yeah, it's unfortunate.
So
well, go ahead.
I was going to say, before we move on to this week's picks, I wanted to review a little man and machine action. But Dylan, what were you going to say?
Nothing. I wanted to know, to determine winner. Well, 3 for 3, I guess, takes it. But I am also curious if we should be taking into consideration the overall dollar value for the week.
That's only a tiebreaker.
Only for the tiebreaker. All right. Yeah, you're right. Congrats, Ben.
Have we had a tiebreaker since we started taking these trades? No.
I don't know. Maybe if you updated your PeakBot picks document, I'd have an idea.
Maybe we.
No, mine is pretty close.
Oh, okay. I'm just giving you a hard time. That's what we do on this show. Yeah, Ben, well done. Thomas, 2 for 3. One got hurt, but all things
interesting.
considered.
So Rusty said the bot didn't close gold yesterday. Had a max loss today. So Rusty, the bot actually placed the order for me on Wednesday, and then that carried over into Thursday. I think I changed that order to a good till cancel order. So there might have been some manual intervention there. That said, always keep an eye on your account and get out when you want to get out. That is unfortunate, and yeah, I don't know what else to say about that. I'm sorry.
Yeah,
it's the nature of the beast.
Yeah, gotta keep an eye on the account. This is auto trading. You're gonna get fills.
So,
you're gonna get. Yeah.
So I'd say in this particular case, take a look at what I did with XOM, that's Exxon, and what I'm doing with XPEV at the moment. Because if price does bump back up a little, you might want to let yourself get assigned those shares, and then work your way out of that hole. And that's kind of what I did with XOM. And
gotta have the cash for it.
You gotta have the cash for it. Yes. So for XOM, I wound up. I sold a credit spread, a $33 credit spread several weeks ago. This was back on the 14th that I sold this, so 3 weeks ago, or 2 weeks ago, whatever that is. 3 weeks, and I wound up in between my strikes. So I actually let myself get assigned. It was actually the opposite of assignment. I got negative shares put on me. So I had negative shares. So I was kind of reverse wheeling. If we look at the credits I earned $63 on the open. I earned $69 the next week, still held those negative shares after that. So the stock price finished above my strike price. And then this week, I took a $58 credit at the contract expiring this week, which I initially sold a contract that was set to, I think it was a $116 strike. And then I adjusted down to $114 strike. So I paid back 72 cents. And then today I actually adjusted down again to a $110 strike. I wound up paying back $373. So if you look at this trade, I've actually paid premium at the end of the day when we add all of this together. But the reason I'm okay with paying $255 in premium is because I was assigned short shares at $113. My current strike price is $110. So I'm going to be able to buy those shares back for $300 less than I originally sold them for, because this is a short transaction. So I was actually able to turn that loss, because I let myself get assigned, I was able to turn that loss into, it looks like a $45 win net after all of my premium has been added together with my gain and loss on the shares. Now, I'm of course assuming that XOM is going to finish below $110, which is my strike price today. And I hope that's safe to say, since we are currently trading at about 106 and we opened just below 110. So that's why I chose a 110 strike. But again, I did have to pay back a lot of my premium, but I'm going to be making money on shares. So instead of what was originally about a $250 loss, rolling that out for a couple of weeks, turn that into a $45 win. Similar story with XPEV. I got assigned shares. We won't go into all of the details, but if you find yourself trading trend spread and the stock price is between the two strike prices in your spread, you might want to consider just letting it ride. If you're confident in the direction that you chose initially, which I was on both of these, then you might just want to stick with that theory. Not financial advice, of course, but you can see how rolling these positions out, making a few adjustments manually, can do some good for you. So with that, thanks for this week.
What's XOM trading at right now? Did you go over that?
106.
Okay, very cool. Do we want to talk about picks for this week? Yeah? Let's go back around the horn. Okay. I will outwardly share this because we are, transparent here at PeakBot. I'm upset with all 3 of the entries that I got from my bot. As far as the strikes, even when we're doing this, right? Like I'm doing my research around 11:30, and your strikes, what you look up and map out at the time, versus when you get your entry 30 minutes later in a market like we have now with so much volatility. My strikes are $1, $2 off than what I was hoping that they were, truthfully. Now, I collected more premium and I shelled out more cash. Spreads were a little wider than expected. So something for us to think about, something for me to think about, truthfully, where I was like, maybe next week I'm just going to enter these manually when I'm looking at them. Sake of the competition is important, but I don't love some of these trades I'm in. So let's take a closer look. I have, sorry, let me get it up here. Got to remove Ben's screen first. Sorry. All right. So without knowing your 2 approach, master plans that I still have no idea what's going on. I have 2 put spreads next week, believe it or not, and a call spread. Some different approaches here, but I was looking at the setups on the watch list, looking at the data I normally try to look at without getting overly emotional, and I liked them. So let's take a look at each of them. I have a Coca-Cola bullish put credit spread, $4 spread, trying to stay above $70. I was hoping to get this filled at 69. Okay, so when we look at the chart here, let's just zoom in like this. So when we look at the chart here, these are the dailies. Okay, so this blue line is now my strike price. I was hoping it was more down here, giving me a little bit more breathing room. Okay, but we're at 70. All right, when we take a look, I collected $57 in premium on a $4 spread. I still feel good about this. When we look at the technicals here, again, technicals are going to be a little wonky, but I have a hard time looking at 0 sell signals for the next week. I was looking at a beta also a lot more this week, this time around, seeing how these stocks react to the overall market. So that was definitely another data point that I'm taking into consideration here. You see a low beta near 0 for Coca-Cola. So that was this pick. Again, I was hoping to get in at 69. I have a bullish put credit spread on TLT, earned $27 in premium on a $2 spread, trying to stay above 92. So when we take a look here, let's get rid of this vertical line. So here's my $92 strike. Obviously, this has been bullish over the last few days here. When we take a look at the technicals, obviously another situation where we see a strong buy over the next week, flattens out a bit more over the month, but this is just a weekly play here. When I had this on the watch list 30 minutes ago, well, at 11:30, I had a strike at 90. So I was feeling really good about that, seeing 4 or 5 trading days all above the strike. Now I got a little bit less breathing room. So I am going to be keeping a close eye on both of these positions throughout the week. And then we got Marathon, which is a stock I have not traded in a very long time. I almost told myself I'd never trade it again. But we got a tight spread here. It's only $1.50, earning $20 in premium. I'm trying to stay under 11.5. So let's zoom in here. All right. So here are the dailies on Marathon Holdings. Okay. We have a little bit of breathing room. When I was looking at it, I think it was maybe at 12 or 12.50. I forget. But yeah, we'll see. Truthfully, annoyingly mentioning it a couple times.
I don't hate your logic and reasoning behind your Coca-Cola position. Looking at the beta, finding that it's not super correlated with the market, I like it. I like that approach.
Yeah, thank you. And then let me ask you guys truthfully, technical analysis in a market like this, just looking at these oscillators, if you will, tough to do, tough to really form an opinion, right? I mean,
because these indicators are all heavily impacted by the shorter term market movements, and when the market drops out 10% in 2 days,
Yeah.
it's gonna be hard to find anything that's a buy.
Yep, absolutely. So, yeah, it just speaks to keep an eye on the position. I think I'll talk offline with you guys about maybe finding a better solution here for Phil's, although it's tough. But who's up?
I think I'm next, right?
Let's do it.
Cool. All right. So I got into KRE, Bank of America, and silver again. KRE is an ETF for regional banks. Now, the reason I went with two banks is because a lot of these banks finance companies that are going to be impacted by tariffs. Now, Thomas's picks will likely talk about the consumer brands that he bought that are most likely to be negatively impacted by these tariffs. But I went with more of a, call it level up perspective of thinking, okay, who finances those companies, who's going to have a broader reach across all of those companies instead of trying to pinpoint exact companies that were going to get impacted. So I went with banks, and then I went with silver, honestly, because it had a nice premium on an iron condor, and I did get the iron condor. And if I get assigned in either direction, silver doesn't move so much to where I'm opposed to holding those shares, whether I hold the shares or short the shares. So that's the direction I went. And we can see, by the way, here's my adjusting trade for XOM from earlier today, adjusting from the 114 put down to the 110 put. I did that. I had to pay back $3.73 on that. Anyways, so KRE, we'll start here. I was able to get $61 in premium. Nice. Sold the $55 call, bought the $51 call, bought the $55 put. So that's a $4 spread. Let's take a look at the chart. KRE. So I actually sold the 51 call here. When I was looking at the watch list, it was the 51 and a half. I like where that's at. I think, could we see a small bounce back next week? Yeah, absolutely. Are we going to bounce back the full? I mean, from this point, it's like 4%. Are we going to bounce back the full 4%? Maybe, maybe not. But I'm thinking by Monday, at least, I'll still be below this strike. Maybe give myself an opportunity to take profit over the weekend. But the other thing I was looking at is the trend. The trend is your friend, right? This ETF has been in a downtrend since basically the beginning of December of 2024. We did pop up a little bit, but then we've been just diving back down. So I'm going with the trend. The trend is my friend in this case. And of course, I mean, Dylan, you did mention technicals, but I don't know that the technicals are going to be the best form of help for us here. We look at the week, there's 0 buy signals. So bearish play for me. So the next ticker is, what was it? Bank of America? Bank of America. I was able to collect $41 in premium, and I sold the 36.50 call. That's the strike price that I was expecting. Similar story from KRE. I think we might see a bit of a bounce back, but maybe not that big of a bounce back. Technicals are still very strong sell, as we would expect. So went bearish here. Now silver was my last play, and I did sell the 26.50. No, I sold the 26. I think I was able to collect 30 cents in premium. Yeah, the 26 and the 28 strikes. So let me adjust these down for our visual. 28 and then 26. So I like this condor here. We're currently like almost smack dab in the middle there at 27 bucks. I've got $1 of wiggle room in either direction, and I honestly don't hate if I'm assigned in either direction. Like if we move up here and I get assigned negative shares at $28, I feel like we're going to pop back down temporarily below that $28 mark. So I'm happy with that. And then if we go below 26, then trend has really changed direction on silver. So I might be holding silver for a bit, but all of these changes in direction, you see dollar movements all over the place on this chart, especially after larger movements. That's what makes me confident that even if I get assigned in either direction on this one, within a week or 2 weeks, I'll be able to trade my way out of it. So those are my picks for the week.
Solid. Let me share my screen. Let me get my picks in there. Dylan, I think your mic's muted.
Yeah, I was on mute. What I was going to say is I like how we're thinking more long-term. You're giving yourself kind of a second life on these positions, right? You're not just calling it a loss if it's a loss. Man and machine. Got to know what you're doing. Thomas, you're up, kid. I'm going off
Screen
camera
sharing.
for a second. Do you know how to? Or do you have access to share your own screen?
No, I don't.
No, we need to change that.
All right. Well, so first pick, I'm going to go short on Walmart. So I originally looking at it, I was selling the $90 strike. Now I got put in at the $89 strike. So it's really not that bad at all. Ben, your face is zoomed in.
I meant to zoom in on yours.
But there we go. So we're in at the $89 strike. I preferred the 90 just because it kind of put me over right there at this kind of what was once support, now couldn't break. So some resistance, probably going to keep dropping for the end of the week here. So in at Walmart, selling 89, buying 93 for $68 in premium. Next up, we have Citigroup. So ticker symbol C. Now, this one isn't a consumer brand, but it is a bank. Actually, that was my only really consumer product was that one. But we're talking C. So selling Citigroup at 62, buying 66. So luckily, I was able to get in at a really, really good strike price there. The reason I liked about it, it's kind of consolidated right around the $62 mark. It's found a level of resistance here in the past, and it took a while for it to break. So now I think, again, if we get a little bit of a bounce up, I think the highest it's going to find itself going is 62. Maybe the week after, if we continue going up, we're going to see it break 62, but by then I'll probably be out of the position. Next up, we have IWM. So the reason for this one, I was reading a little bit, and small caps have officially entered bearish territory or correction territory, meaning it's probably going to be bearish, trading sideways for a decent bit of time. So odds are it's going to be trading sideways or bearish for the next week. So sold call credit spreads bearish on IWM, selling 187. Wasn't the strike I was looking for originally. It was 189, I believe. But 187, close enough. Selling 187 there. Let me put on the 3-month chart. Yeah, so selling 187. I just think we're just going to be overall bearish. It wasn't necessarily a level of support or resistance. It's just been so bearish that trend is my friend. Going to keep going with it on a bearish play there. Selling 187, buying 193 for a pretty nice premium of $151. Those are my 3 picks this week.
Okay.
Very nice. Very nice.
By the way, I was looking at some statistics from PeakBot picks here. And it's tough to say because, Ben, you have a couple that were losses that you're not counting as losses, right? Because they're open.
Well, in my journal, yeah, I'm switching it over for sure.
Yeah. With that, Ben, you are if we're going to count those losses that you're turning into wins, let's just say they were losses. You have only lost 4 out of 21 picks. So you are 17 for 21 and maybe even better if we wanted to say, right? So that's an 80.9% win rate. So nicely done. Mine is coming in at 66%, 66.29%. Thomas, if you think you're going to go 2 for 3 this week, now we're looking at, 21 total. 1, 2, 3, 4, 5, 6, 7, 8 for 21. So 8 losses. Okay, let's do the math. Thomas, I have a better win rate than you. It's fine. It's okay. It's okay, man. You're at
Can't happen.
61.9% win rate. I'm at 66.2. Ben's at
That's an all-time
81.
low.
Ben, you're crushing it.
Good job, Ben.
Well done on PeakBot picks, team. What else? Okay, you guys saw downstairs here, Tradier Summit, Future of Trading Summit, hosted by Tradier. Ben and I will be chatting next Wednesday at 2:45 Eastern on how to eliminate emotions through automated trading. Okay, so a great panel, a great discussion Ben and I will be having. So tune in, free, sign up. Summit.tradier.com. I thought we had a banner for that. There it is. I don't mean to go over the other thing, but I want you to know where to go. Summit.tradier.com. Anything else here, gentlemen?
Let's wrap this up.
We're good.
I'm hungry. Appreciate everybody tuning in. As always, over 1,000 live viewers here today. So thank you so much. Best of luck out there. Enjoy your weekend. And as always, we'll see you at the peak. Take care, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.